The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Okay, I guess let's start off the webinar series for today. And today's webinar for XM will be backtesting your strategy on MT4 and MT5. And as usual, the disclaimer, guys. This is the disclaimer, and nothing should be construed as investment trade advice. And you should always take this as educational material only. And please be careful when you trade, guys. And if there are any questions that you would like to ask me after this, during this webinar, just feel free to type in the chat box below. And also, after we go through this webinar, we'll be going through the charts together and to teach you on how to backtest your strategy. And I'll give you an example of how I usually backtest my strategy and how we should look at see if there's any opportunities that we can look for the rest of the week. Okay, and I'm your host for today. My name is Woon Hong, and I'll be going through with you the backtesting on MT4 and MT5. So the agenda for today would be what is backtesting, what to watch out for, tick by tick backtesting, and lastly, common backtesting mistakes that usually beginner traders make. So what is backtesting? So the overview, I'll be giving you an overview of backtesting, and it is the use of historical data to test your strategy. Secondly, knowing the behavior of your strategy. And thirdly, fix your strategy. And lastly, to improve your strategy. So backtesting in trading is basically simulating the process of trading while using a set of rules over previous price data to see how much money would have been made or lost if a trader had followed the same strategy. And it is actually important to follow the exact same strategy, as usually when beginners trade, they usually would tend to change their strategies maybe after a month or so, because they feel like the initial strategy isn't really profiting. But if you want to backtest properly, you should actually follow the same strategy, and you should backtest it for maybe at least 1 month to see if the strategy works, to see if the strategy is profitable or is making a loss. So it's also essentially a retroactive test where a trader enters a set of rules like a currency pair, time frame, and technical indicators. So for example, you are only backtesting your strategy on Euro USD and on the high time frame like the 4 hour time frame, 1 hour time frame, and 15-minute time frames for your entry. And also if there are any technical indicators that you guys have, for example, um, MACD, RSI, SMA, simple moving average, or exponential moving averages. So then the automated backtesting trading system can analyze the tick data and show what would have happened if you had taken the chosen strategy. So always keep in mind that your backtesting plan will always be the same currency pair that are testing on, could be Euro USD, and I would suggest to trade to backtest your data on Euro USD because it's one of the most stable currency pair, or GBP USD because it most of the time it actually respects different trading strategies, and also to stick to a certain time frame. So for example, you have H4 point of interest. Later I'll show you guys. H1 for sorry, H4 for your overall trends, for example bullish or bearish trends, your H1 point of interest, and lastly for your 15-minute entry points. And also for technical indicators, usually I wouldn't utilize much technical indicators as a start because I want to focus on market structure and my entry points. So I'll only usually use the moving average to identify the trend itself. I would suggest simple moving average for beginners so you can see the overall trend, whether it's bullish or bearish. So what can we watch out for? So you should always watch out for net profit or loss. Um, so basically, you can see your on MT4. Later, I'll show you guys an example. You can see net profit or loss at the bottom of your MT4, if you guys know, and also volatility measures such as news. Uh, because news always tend to make the market more volatile. And next would be averages. So averages is basically how much average, how much is the profits or loss on average that is gathered. So for example, maybe you have made a profit of $30 today. Then over the next 5 days, you made a profit of let's say 30, 20, 30, 20, 30. So it's basically 30 plus 30 plus 30 is $90, and then another 20 and 20. So it's $130. So on average, you're 130 divided by 5. On average, you're making that amount daily. Yeah, cool. And that's if you are making no losses at all. So for ratios, would be how much, what is your risk to reward ratios per trade? And usually, ideally, you should always aim for 1:2 or 1:3. Because imagine if you are aiming 1:2, 1:3, even if you are, even if your winning percentage is not as high, but you are basically um, getting making profits if for your 1:3 trades. So later on, I'll jump to the charts to show you guys more examples. And annualized return is simply say, for example, you backtest your strategy for a year and you see how much what's your return like in 1 year's time. So what is tick by tick backtesting? So tick by tick backtesting is basically in-depth data. So you'll gather data from, let's say, a year or many years ago. So you'll gather this data and then it will actually backtest your strategy for you. So this tick by tick backtesting only works if you're uh for example you automated your strategy into EA, means that your strategy is now a bot can trade your strategy for you. So you implement this EA into MT4, and then you use this backtesting data to trade this EA for maybe a couple of years, and you'll gather all the data that you need. So later on, I'll show you guys an example whereby we backtested this strategy, one of the strategies that I researched on, and then it'll show a strategy that has been backtested for a couple of years and the returns, etc. So now I'll just carry on. The second pointer will be volume weighted into price. So it'll show you this volume weighted into price will show you the how much volume uh, is gathered based on the price that you entered at. So usually sometimes when beginners trade, they wouldn't know when is the right timing to enter a trade because they see for example, they are betting on a breakout to happen, but they never realize that at this it hasn't been London or New York session yet, so the price hasn't moved that fast. So the volume will naturally be lower than London or New York sessions. So for London sessions is where the GBPs, GBP, for example, Euro USD, GBP USD, etc., will be more volatile because of that timing itself. So it's approximately treated usually for pre-market is cheap 2:30 p.m. Singapore time, and then for London session it will open from 3 all the way until I would say 10:30 or 11 p.m. Then there comes New York session, will be 11 p.m. all the way to before Asian session. Yeah. So these are the timings to watch out for. And next will be creation of elaborate models. And fourth will be prevent unexpected surprises. So um, unexpected surprises would be news. So all these news, basically you have to know when the news comes out. When you're backtesting your trading strategy itself, you can always take into account. The bot wouldn't take into account the news, but uh, you have to watch out for all these news on a daily basis because that's where you should know. Okay, maybe tomorrow there'll be news on unemployment rate. So unemployment rate, as we all know, is news that will cause the markets to be very volatile, especially for gold, um, USD, GBP USD, all the USD pairs. So to prevent such unexpected surprises, we should always look out for news. And later on, I'll show you guys how to watch out for news. Uh, it's basically on Forex Factory where you can see the important news, and you should always filter out days that you should avoid this news. So lastly would be simulation of trade execution. So simulation of trade execution means that you are basically simulating when you should enter a trade, and you should always enter on a specific time to see if that trade will actually work out well for you or not. Okay, so this is a graph. It may seem very complicated, but let me just break down this graph for you. So basically, we have let's say we are back testing on USD JPY, and this is the Asian pair. So you should usually trade this pair during Asian market or USD or London timings. Yeah, because there's USD inside. Simply put, if there's USD inside here, means that usually London timing, these pairs will actually be more volatile than usual. And let's say you're backtesting on the 1 hour time frame. So on MT4, if you are using a backtesting software and then you are running a EA, you can always decide when the time frame that you want to backtest on. So let's say you're backtesting on the 1 hour time frame, and you can select for the model every tick. So means the most precise method based on all available list time frames. So parameters, you wouldn't have to adjust much. And then next would be they'll show you how many bars in test. So the duration, 1 bar is 1 hour. So this is equivalent to 7,000 hours, and it has modeled 19 million ticks, and the modeling quality is 35.14%. You don't really have to care about this ticks model and modeling quality. I mean, modeling quality, in my opinion, is just telling you how well it's running. But um, basically, what is important is this mismatch chart errors. So if it's more than about 8 to 10, means that there are a lot of errors, and then you should run it again. Yeah, so you can see that the initial deposit is $10,000, and then the total net profit is $1,567, and then the gross profit is 4.6K, and the gross loss is negative 3K. So what is important is your total net profit or loss, and then all these profit factors, expected payoff, you wouldn't have to worry much about this. So the next important point will be maximal drawdown. So maximal drawdown is how much drawdown you were in for the longest period of time. So the longest period of time that uh, it was in negative was 1,342 dollars, and means that the longest drawdown was the highest drawdown was actually 10.57%, which I would say is pretty high. Usually you want to keep your drawdowns to maybe 5 to 8%. Yeah, that's the ideal maximum drawdown. Sorry. Okay, then the next important point will be total trades. So it has traded a number of 28 times in approximately, so let's say bars in test 7,000. So that's 7,000 hours, but it has only traded 28 times with a net profit of 1.5k. So I would say this bot itself is pretty decent in a sense that it only takes trades that is confident of rather than scalping trades. So this bot is relatively stable. But you guys should know that EAs, for example, those expert advisors are always not profitable in the long run, and it's usually only profitable in the short run. So you shouldn't really count on EAs itself, but also you have to trade manually instead. Okay, then you can see that the profit trades percentage of total is 13. So which is a 46.43%. But if you can see, even though the profit trades are only 43.43%, which is lesser than the number of loss trades, but you can see that the this strategy is profitable as it's still in net profit. So basically, this trade is not 1:1, but at least 1:2 for most of the trades. That's how, even though it's the profit trades are lower than 50%, but it's still in profit. So you can see largest profit trade, 372.84%, $84. So $372 of 10,000 is about 30 is about sorry 3%. Yeah, 3%. And the highest loss trade is only about 2.8%. So you can see that most of the time the bot is actually gathering 1:3 because let's say you're only risking 1% per trade, and then you are out at about 1:3, you're out at about 3%. So this bot is actually following the rules of risk to reward ratio. As mentioned previously, ratio is very important when you are trading because you want to hit at least 1:2 or 1:3, never lesser than that. Yeah. So these 4 points, I'll explain it in detail in the next slide. So backtest report key points. So as mentioned previously, total net profit, um, maximal drawdown, total trades and profit trades. So we can see total net profit is the overall financial outcome of trades generated by a trading system if it had been used in the past. So it indicates potential profitability of a strategy, although it doesn't guarantee future performance. So this parameter provides an estimate of the potential gains from using the system. So this shows how total net profit is the number one most important key point, because it shows whether your strategy is actually profitable and see what is the estimate number of potential gains you can gain for let's say 1 year time. Yeah. So next would be maximal drawdown. So maximal drawdown refers to the largest loss experienced by the trading account in both monetary value and percentage relative to the account balance. So simply put, a lower drawdown is generally preferred, but it depends on the trader's risk tolerance and account size. So For example, if a trader has $10,000 with a risk tolerance of 20%, the maximum drawdown should not exceed $2,000. Because if we take this chart as an example, the maximum drawdown is actually 10.57%. So I believe that the person that use this bot to trade place the maximal place the uh, means his risk tolerance is pretty high, because he believes that, okay, my trade my every trade, the maximum loss can only be 20%. So just nice is 10.57%, which is half of his expected maximum loss. Yep. So you should always keep in mind that this maximum drawdown should always suit your own trading style. So let's say you're a trader that wants to risk lesser. So you should keep your maximum drawdown to the minimum of maybe 5 to 8%. Usually for my own personal opinion, like my own experience, usually my max drawdown per trade would be only 5%. Yeah. So total trades next represents the overall number of trade positions taken by the trading system. So it helps to assess whether the strategy is aggressive or moderate by comparing the number of trades to the investing time frame. So for example, if there are 200 trades in 3 months, it indicates an average of 3 trades per day, making it suitable for intraday trading. So a smaller number of trades may be better suited for mid-term trading. So if we use this example again, so we can see that this bot only took 28 trades, um, 10 short positions and 10 long positions. So we can see that this bot itself is actually very specific on the trading strategy that it wants to apply on USD JPY. So I think if this bot is only trading maybe 28 trades, so I think it's a trend following bot. So it only follows when there's a breakout happen. So usually a breakout only happens on a high time frame, quite rarely. So later on I'll show you guys for example, maybe one of the strategies that you guys can use to backtest. So I'm guessing maybe is using the moving average plus maybe breakout of support or resistance along with moving averages. So it doesn't happen that often, but if it happens, it can profit quite a lot. Yeah. So lastly will be profit trades indicates the number and percentage of profitable trade positions out of total trades. It reflects the trading system's win ratio with a higher percentage indicating a more successful system. Usually this is not the case. I mean, if let's say you are at 70% win ratio, um, you are definitely profitable. But if you can see this example, so profit trades, even though it's lesser than the loss trades, however, if your minimum risk to reward ratio is 1:2 or 1:3, like I mentioned earlier, your your profit trades can also be lesser than your loss trades. Because if let's say I lose 15 times, so I'll lose maybe let's say 1% per trade. So I'll probably lose 15%. But if let's say my profit trades, I profit 13 times 2. So my minimum risk to reward ratio is 1:2. So I'm losing 15% total, but I'm profiting 26%. So if we cancel out 26 minus 15, I'm profiting at least 11%. So you can see that the total net profit. So these two usually is comparable to each other. So let's say we can see that 1.5k net profit. So I'll estimate maybe 1 is to 2.5 for this bot's risk to reward ratio. So risk to reward ratio is very, very important. Like I said, it's important in a sense that because even if you lose, but you profit, let's say you lose 2 trades, you're down 2%. But you win 1 trade, you cover back your 2%. Yeah, so it's break even. Yeah. So always remember that risk to reward ratio is very, very important. Okay, so the last part is common backtesting mistakes that usually beginners do because they are unsure of um how they should backtest their strategy itself. So firstly would be unrealistic backtesting results. For example, you backtest your data and you realize that your backtest data actually came out with a profit of maybe 50% in 3 months. Then you know that okay, this strategy you are being biased towards this strategy and you're only taking profitable trades. So you should always backtest your strategy and realize that you could actually make losses as well. So next one would be do not undermine your data. So your data should always be consistent and you shouldn't like I said, have bias towards this data, and you should always enter on the same pair, same time frame, and also the same technical indicators if you have that you use. Yeah. So getting the timing right. So basically, what we mean by getting the timing right is that you should always enter on, for example, you're trading Euro USD. You should always enter the time at maybe three starting from 3 p.m. onwards instead of doing it on Asian pairs. So your backtesting period should be from 3 p.m. Singapore time to 11 p.m. Singapore time, right before New York. Yeah. So lastly would be incorrect assumptions. So incorrect assumptions means that you're basically saying, okay, so if you are doing the let's say I don't know if you guys know about smart money concepts. So there's this thing called smart money concepts and you're trading your strategies based off supply and demand and also order blocks. So if you trade this strategy itself or for Euro USD, you cannot assume that okay, uh, basically you are trading from 3 p.m. to 11 p.m. Singapore time. You cannot assume that after this timing, the pair Euro USD will be the same because for New York session, Euro USD will be slower as compared to London session. So that's one example that I can give you guys for incorrect assumptions. Okay, so next, let's go to the chart. So let's say, okay, let's choose Euro USD. Okay, let me just minimize this. Okay, so usually um okay, so let's try out a strategy based off let's just try this strategy. Let me see what mm, okay, moving average. Simple moving average. Okay. So let's just try this. And then let's try on the H4 time frame. Okay. I don't know if you guys have TradingView Premium, but if you guys have, this replay button is very, very important. So let's say you wanna then you choose the quantity one. Okay. Okay. Yeah. So this replay button, right? It can help you in a way to see if your strategy is working out well, and you can replay and set your positions. Let's say you want to take a sell right here. You are looking to let's say let me just zoom in. You're looking to sell right here, and then this will show you whether you are in profit or in a loss, like this little bar over here. And then you can show, yeah, wait, let me, yeah, then after that, once you hit play, you actually, oh wait, why is it not working? Yes. Okay, so the replay button, if you click here, then after that, the chart will actually replay. Boop, 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 boop. Then the chart will play, and we'll see whether you are in profit or loss. But usually, I find that trading view premium is only good for those that are trading very frequently. And let's say you want to add an alert right here. So let's say we are trading the SMA. So we can see right here. Uh, okay, so let me just show you guys an example. So let's say we can see that there's a high right here. Okay, so we can see it's an uptrend. It's an uptrend right here. Okay, so uh, let me just see this. Okay, so previously, let's say this is one of our key areas. Okay, we can see that this is a very nice support area because price. Wait, let me. I thought. Yes. Because wait. Let me just show you guys. Essentially for backtesting, right? TradingView is also able to do it. It's just a reference for you guys. It's the same as doing for MT4 or MT5 because I'm just showing you guys example of backtesting itself. You can also use it on MT4, MT5, but usually for backtesting wise, you can also do it on TradingView to practice first, and then after that you can use the tool on MT4 to backtest your training strategy. Yeah, because for MT4 and MT5, right, it's good to backtest if you have a expert advisor. So um you guys can also tune into one of our webinar, which is custom indicators and EA. And then we'll also teach you guys how you should backtest your EAs using MT4 and MT5 there. But if you would want to backtest your strategy like easier, TradingView is definitely a easier method because you can just access these tools easily, and then you can just save your different chart layouts after that. So um yeah, it's a lot easier in my opinion if you use TradingView, which is exactly the same as MT4. It's just um with more access to easier indicators. For example, you want to find different indicators like RSI, etc. You can just search it here. But for MT4, it's a little bit more troublesome. So TradingView is a more for example, it's a more simple platform for you guys to use. So it's easier to show you guys here, and maybe you can practice your backtesting data here as well. Yeah, so let's just move on to okay, we can see that this support area is a very nice support area on the H4 time frame until it actually broke through. So this is somewhat we can see is a M pattern. So almost like a triple top, but I'll just take this area. So you can see that this is the neckline, and then it actually broke through. So if you are testing your strategy, let's say this is let's just use a simple strategy. So um, key levels, then simple, coffee candles. engulfing candles. Okay, let's just use this. Okay, so this is our, let's say this is one of the example. So this is essentially our training plan. So firstly will be key support and resistance levels that we should identify. And then we will want to see a breakout of the SMA at, okay, let me, at key levels. Then next will be 15-minute entries engulfing candles. Okay, so let me show you guys an example of how you can backtest. So for example, we identified that this is one of our key level and it has a breakout of this this support level. And then after that, we are looking at let's say breakout. Okay, so we can see that this area, even though price has broke out of here, but ideally we are looking for sales. So once it came back down, usually what's our third criteria, which is 15-minute entries on engulfing candles. So let's just go back to this area. Oh wait, 4-hour time frame. Okay, so let's just mark out this area right here. So we're looking for sell around here. Then your stop loss will be above this high. At least 1:1. 1:2. Okay, so okay, let me just adjust this. Break off. Okay, retest key level. Okay, so this is our trading criteria. So next, so there's already a breakout of this key level, and then next will be the retest. So we'll go down to the lower time frame. Okay, so we can see this area. Okay, so this is the breakout of the of the support area, and then it's maintaining below the SMA. And then once the retest come out, we can see that it actually retested this support level, and we can refine our stop loss to, I would say, here. Or if you're more you like more risk, so you adjust your stop loss to maybe this high over here, or even around this area. But I would say around this area. But I'll say that this doesn't really make sense. So you can put it at around this high. But to be safe, I would say this high right here. So you don't want price to take out this high, because if price takes out this high, means that it's shifting back to a bullish trend. So if you were to look at this area, let me just take our let me just copy this, and okay, so remember our criteria. Where is it? Yeah. Okay, so we can see that, let's say we're back testing this strategy. So it's a break of this key level. And then after that, next we are looking at sorry, this shouldn't be breakout of SMA. This should be um 10 for bearish, for bullish. Okay. So let's say we want the price to stay below the SMA line to show that it's still bearish. And then so it broke through our key support area very nicely, and it's still maintaining below this SMA line. You can see that this SMA line is still maintaining below it. Then Okay, there comes the retest over here because what we're looking at will be retest of key level. So we are looking at the retest and actually retest this area. So our sell will be this area around, yeah, around here. And then we can see that 15-minute entries engulfing candles. So what is engulfing candles? Basically, engulfing candles are the, let's say you're looking for a bearish trend. So engulfing candles would be, let's say this is a bullish candle. So a bearish engulfing candle uh, would be a bearish candle eating the smaller candle. So this is one of the very basic strategy that I was using during my early days of trading. And so yeah, so there will be many bearish candles. Yeah, so the candle you have to look at would be this one, this bearish engulfing candle is above SMA. Yeah. Even though it's above the SMA, right? It's natural to be because you're on a lower time frame. So it's natural to be above the SMA line. But overall, oh, that's for the retest. So let's say, right? Okay, so for the retest, it's okay to be above the SMA line because it's natural that price has to go up and retest, right? But if let's say price actually did this, let me just okay, let me just draw it out for you guys. So let's say price actually retest, but price was still above the SMA all the time. Then that's where you wouldn't want to trade. So you can see that once you retest, it dropped back, it dipped back down, and it was maintaining around the SMA line. So that is one of the criteria as well. Yeah. But you see if we retest, right, and then it continued to be above the SMA, so means that the candle was doing this, and then it keeps wicking out and coming back to your support area, means that it's not a really valid trade. But if you're backtesting, right, you should always keep in mind to just follow your set of rules. Doesn't matter. Then you should enter right here. Once you see the retest, just enter, because you are backtesting your strategy. So you should always follow the same set of rules, and you shouldn't be too strict on it. But if you are really live trading, then you should be careful of when price is doing this movement instead of this nice bearish movement over here. Yeah. So if you're backtesting, you should always just follow your set of rules instead of being biased, because usually for backtesting, right, is to see if the strategy actually works out well. But for live trading, of course, you have to be more careful. Yeah. So okay, then we can see that this trade actually worked out pretty nicely. Um, it was bearish after it came down bearish again. Then you can see that okay, you are quite confident about this trade, so it was making this move, and then it came down again. So during this area, usually once it runs 1:1, so 1:1 is about here. I'll close um I'll close 50% of my trade, and then or maybe 30%. Yeah. Usually I'll close either 50% or 30% of my trade, and then I shift my stop loss to break even. Yeah. So in the end, I'll actually close 1:1 of my trade. Like I'll make 30% of my initial um okay, so let me give you guys an example. So let's say I'm $1,000 account. USD account, risk 1%, potential win 3%. So let's say this is my trade as well. Okay, so for every trade, I'm risking 1%. So let's say I'm risking 1%, but my stop loss for this trade is actually 61 pips. So let's say, so we count 1% of 1K is 10 $10, and then we this $30. So okay, we are risking 1% for 61.2 pips. Let's just take it as easier reference. Let's just take it as 50 pips. So your pip your entry, your position $10. So 0.02. Yeah. Okay. Then if let's say you exceed at, if runs to 1, so if run 1 is to 1, then you're in profit $10. But you you close 50% and shift stop loss to break even. Okay. So this is what you did. So you run 1 is to 1. So basically at maybe 50 pips, you run 1 is to 1, you shift your stop loss to break even. Your basically your target is what 1 is to 2. So let's say 1 is to 2. Okay. And then once you ran 1 is to 1, you are actually in profit of $10. But you already closed 50% because you want to play it safe. So you already profited $5. And then you shift your stop loss to break even. And then you actually risk nothing at all already. So you're in profit of $5 for this trade. But if you hold all the way and you actually hit your target of 1 is to 2, which is 100 pips, so your profit $20. Yeah, that's if you never close from your entry all the way until your take profit target. So you actually profit $20 for this trade. Yeah. So when backtesting, you should always just follow a set of rules, and the set of rules should be very strict. So for example, this strategy itself. So just level 15 minutes engulfing candles. Minimum minimum 1 is to 2. Okay, so minimum 1 is to 2. Oh, yeah. Okay. Yes. So yeah, you should always have into couple to make your backtesting strategy more reliable. You should always also follow a specific trading plan. So let's say your risk is 1% and your potential risk to reward ratio is 1 is to 3 or 1 is to 2. Then you should always calculate it afterwards, and you can do it on a daily basis. But usually for back testing, right, I would suggest to do it for 1 hour or 4 hour time frames, because if you do it on a low time frame, low time frame is for your entry, is to see whether you can refine your entry better. And but for 1 hour and 4 hour time frames is for you to backtest your strategy itself, because it can be kind of tiring to keep doing it manually and looking for setups. Yep, unless you actually manage to ask somebody to code your strategy into an EA, then MT4 can run the whole strategy itself for a set duration of time. So let's say you want to run this strategy for an hour, not say an hour, 1 year. Then MT4 will take this EA that you have created and run this strategy for 1 year. Then you can see whether the strategy you have chosen is a profitable strategy. Yeah. So if you guys are interested, you can definitely look on uh Fiverr to see if you can code. Please show how you run your strategy on trading view. Okay, so for trading view, right, is manually, is very manual. You cannot do it automatically because unless you do this strategy tester thing. Okay, so let's say you are doing let's see, do you have MA? Okay. Uh, so let to test. Give me a second. Why is it loading? RSI momentum. Okay. Okay. Where's the hmm? Oh no. Okay, for trading view, right? I think you need to be premium in order to do this strategy tester thing. But I'll suggest to do it manually because manually is a lot easier. It's more tedious in a sense, but it's more reliable because uh let's say I give you an example. So wait, all right, okay. Okay, so for let's say today there's a news for, let's see, yesterday is the news. 6 a.m. GMT, 6 a.m. 2 p.m. Okay. So let's say uh there was news. Okay, let's take Thursday, July as an example. Let me just delete all this first. Okay. July 8:30 p.m. 8:30 p.m. July. 8:30 p.m. GBP USD 8:30 p.m. Okay. 13 July is 12. Okay. This here. Okay, so let me just okay. Let's see 4 hours. Support. Okay. Okay, so we have identified this area as our first support area. So we'll go down to 1 hour chart. And then we can see that this area actually came. So it's supposed to be. Okay, let's just. This one was a resistance. So it was a resistance. Yep. Okay. Because we can see that previous price was a support, it broke through, came back up, tested as a resistance. So if you are looking at this from previously, we can say that this was a resistance. And then we go to a H1 time frame. Yeah. Okay. This is news. Okay, so you can see this area is where it actually broke through, and then it's above the SMA line as well. So breakthrough of key levels is one of our criteria. So breakthrough above SMA line, so two criteria met. And then after that, what's our next criteria would be 15-minute entries. So 15-minute entries. Okay, so let's say, yeah, so 15-minute entries, it broke through. So when it broke through, one of the other confirmation would be the body to close above this resistance area. So you can see the body close and is still above the SMA line. So you can see that it's bullish. Then we are looking for engulfing candles. So once it came down, or once it broke through, body close. So this, this green candle, let me just draw for you guys. So this green candle, this one, was the body close above this first resistance. Okay, then this was the retest. If you want to look at the 5-minute as well, you can see that it's a very nice retest here, this area, very nice retest. And then you're looking for a long position when there's a bullish engulfing candle. So this candle, I think on the 15 minutes you can see as well. Let me just zoom right in. Okay, so ideally you want to enter on this candle. Yep. Your stop loss put below here or this low, and then your 1:2 minimum. So you just put 1:2, and you can see that it actually hit your TP in this area. Where does it keep? Yeah, you can see that it lined up very nicely for this trade. Yeah, so always follow. Like I said, I'm not being biased, but so I'm just following the set of rules that we had just now. Basically, um, the retest, and then above the SMA line. So even if it L, right? So even if we take a loss, it doesn't matter because we're just back testing. So let me just try an example whereby we'll make a loss. So um let's see. Okay, we this big. So let's say this is one of our key levels. Never break through. Okay, we'll just take this out. Okay, let me see if I can find any let's see. Key level. Breakthrough. No, broke, came down. Breakthrough retest. Okay. Breakthrough. Okay. Let's see this. I think this is where we'll probably take a loss. Okay. So let's say we have identified this area as our resistance area. So we can see this area whereby price actually closed above the body, close above our resistance area, and then you are waiting for the retest. So okay, this one. Okay, so here, let's say 15 minutes if we can find. Okay. Okay, let's say for this trade, uh, body close retest. Okay. Mm, yeah. So let me show you guys an example. Let's say if you don't really follow the same set of rules. So okay, we can see very nicely. Price book above, right? Book very nicely above, and then it has been it's been making rejection candles. So we can see that okay, price may actually want to break above this area. So you can see that this would probably be the retest. So go up, come down, retest. But you forgot one of the option was bullish engulfing. So let's say you're in a rush and then you wanted to sell, wanted to buy. So you forgot about bullish engulfing because we can see that there's no bullish engulfing here. So you didn't follow your same set of rules. And then let's say you put here, let's say you put a stop loss here. 1:2. Let's say 1:2. Okay, let's just put it here. Then we can see that price didn't hit almost hit a stop loss, but went back up and then hover, and all the way until hover. It came down and went down all the way. So this is an example of you should always follow your same set of rules to show that you should actually uh backtest this same set of rules so that you can be consistent with this strategy. And then sometimes you may see losses, but you should always remember that losses are always normal in forex, and there's no 100% winning strategy. So you should always stick to a strategy that you know you have practiced and you have seen and you have backtest. So backtesting is always important in a sense that you can feel confident about this strategy in the long run rather than you keep trying to go for different strategies and see what works. So you spend a lot of time doing that because that's what I did last time. And then I spent a lot of time figuring out what is the sure, like a sure win strategy, but it won't really have a sure win strategy. Yeah. So this is what I can advise you guys to always stick to one strategy and to backtest it on at least three pairs that you know that it can work. So the pairs that I suggest would be Euro USD, GBP USD, and GBP JPY. Or or USD JPY is also okay too. Yeah. Okay, so yeah, we have come to the end of our webinar series. And I hope you guys learned something new about backtesting. Backtesting can always be done on MT4 and MT5. But that's better if you have a EA, expert advisor. If not, you can do it on TradingView itself. Yeah. So you can do it manually to always uh backtest your same strategy, same set of rules, and don't change your strategy too much because it'll cause you to have to backtest again. And then when you're backtesting, you can maybe learn something new or two and see what works best for this strategy. Yep. Okay, thank you guys, and I'll see you guys in the next webinar.